In today's episode, I'll talk about three interesting stories. In the first story, I'll talk about how Mamaearth, which was once almost the poster child of Indian startups, is now struggling a little bit. In the second story, I'll talk about why gold is in the news yet again. And in the third and final story of the day, we'll analyze the footwear industry in India and understand if there are any insights that are there to take away for us as investors. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy to understand, yet one level deeper as compared to traditional news channels. I'm your host Anurag Bansal, and today is Tuesday, the 19th of November. By the way, the Daily Brief is also available on Spotify, Apple Podcasts, and any other places where you consume your podcast from. So make sure if you're interested, do subscribe us there as well. We also send out a no spam newsletter every single morning that covers the essence of whatever we cover in this video as well. So if you are interested in reading instead of listening or watching, you can also consider subscribing to our Substack. All the links are available in the description down below. So with that said, let's begin with the first story of the day. Look, Mamaearth, which is one of the most popular beauty and personal care brands in India, recently reported a surprising loss of 19 crore rupees. Now, for a company that was just in the last quarter celebrating a 40 crore rupee profit and has also been a digital first success story, this turn of events raises some big questions for us as investors. By the way, let me tell you that it is not just the profit, but their revenue has also slowed down. It has slipped 7% year over year to 462 crore rupees. So the question here is, what exactly went wrong for a brand that once almost seemed unstoppable? To understand what is exactly happening in detail, let's start from the beginning and look at how Mamaearth even got to this point in the first place. See, Mamaearth's journey began online. They found some early success by using e-commerce platforms like Amazon, Flipkart, etc., where most Indian consumers at that time were shopping, and increasingly so. Now, Mamaearth is not at all alone in this approach. Many beauty brands at that time were adopting a direct-to-consumer or a D2C strategy. To very simply put this, they focused on reaching consumers directly online by bypassing the traditional way of selling through retail stores via distributors. Now, for some time, this strategy did work wonders for them. It was efficient, and digital ads allowed them to create strong identities without the high cost of traditional advertising. But the thing is, as more and more beauty brands started to enter the online space, the competition also started to heat up. Mamaearth was now competing with almost the same set of online consumers, but now with countless other brands, and therefore it became harder to stand out for them. Mamaearth also realized it had to find newer ways to grow beyond just being an online brand going forward. And that is when they made a major move. They decided to go offline. Today, about 35% of Mamaearth's products are sold through physical stores. Going offline obviously allowed them to reach more people who might not be as comfortable in shopping online as they are in shopping offline. And this gives them broader reach across the entire country of India. But the thing is, this shift came with its own set of challenges. See, unlike an online store where you can track every sale and adjust very quickly, selling in physical stores adds a lot of extra complexity to the process. There is the need of logistics, managing inventory at multiple stores, and building relationships with a network of retailers. Now, Mamaearth initially managed this by working with super stockists. For your context, super stockists are large distributors who buy products in bulk from the brand and then distribute them to smaller retailers across the entire country. Now, this approach helped Mamaearth quickly get its products into stores across India, but the thing is, it also created a problem. See, unlike online sales where Mamaearth could easily track inventory in real time, relying on super stockists also meant that the brand could not exactly see how its products were moving in each store individually. Now, without this detailed information, Mamaearth suddenly had lesser control over its stock levels in different regions, and this led to an unexpected issue: stockpile of unsold products. Now, reports from the All India Consumer Product Distributors Federation, which is an organization representing distributors, indicates that over 2,000 distributors were stuck with large amounts of unsold inventory, and this included products that were nearing expiration as well. Distributors started to blame Mamaearth for not replacing expired products promptly. Even though Mamaearth denied these claims, they acknowledged that it needed to improve their inventory tracking and control. So in response to all of this, Mamaearth launched a project called the Project Neve. Now, the idea behind this project was to replace super stockists with smaller direct distributors in major cities, and this would give Mamaearth closer control over inventory and better data on sales. Now, with these new distributors, Mamaearth also hoped that they could track their products a little more closely and they could keep their supply chain smoother and more responsive. But the thing is, everything did not go as planned. During this transition, the new distributors ended up with too many unsold products again. Mamaearth eventually had to write off 63 crore rupee worth of expired inventory. Now the important thing is, this write-off was not just a big financial loss, it highlighted a deeper issue here. See, when a company has to throw away large amounts of inventory, it usually points to problems with demand forecasting. Demand forecasting is the process of predicting how much of each product consumers will eventually buy. Now, Mamaearth's specific forecasting issues were likely made even worse by its rapid expansion into newer product lines. In 2022 alone, to give you context, they launched 122 new products, which is double the average of the beauty industry as a whole. And the thing here is, most consumer companies rely on a few core or hero products that consistently drive their sales. But instead of focusing on its best sellers, so to speak, Mamaearth kept introducing new products, stretching its resources very thin and making inventory management even more challenging. Now recently, Mamaearth CEO Varun Alagh acknowledged the need to prioritize these hero products going forward. On top of these challenges now, Mamaearth has been spending a large chunk of its revenue on marketing. Now marketing spends account for about 35 to 42% of their revenue today, and this is higher than industry average. This budget, for your context, goes towards influencer partnerships, digital ads, and social media campaigns as well. And these strategies definitely work well for building the brand online, but the thing is, they have not quite been as effective offline today. In physical stores, customers usually rely on what they see on the shelves or what recommendations they get from the store staff rather than what social media ads tell them. Now, this gap has raised questions about whether Mamaearth's marketing spend is actually sustainable or not. And this is especially problematic given their recent financial pressures. So the Mamaearth story today is a classic example of the challenges that come with transitioning from a digital-first brand to an omni-channel brand. Now for Mamaearth to move forward, it is very clear that they need to shift towards a more sustainable business model, a one which focuses on a few products, tightens its inventory management, and also adapts its marketing strategies to suit offline customers a little better. Now let's move on to the second story of the day and talk about why gold has been making headlines once again. See, gold prices have surged to new highs in the month of November. For an asset that has been known for its stability, this is no small feat for sure. But the question here for all of us is, what is exactly driving up these gold prices and why is gold suddenly more valuable than usual? Now I'm sure all of you all watching or listening to this by now know that gold is often seen as a safe haven investment. Whenever the world feels uncertain, whether it is for political, economic or social reasons, people tend to park their money in gold. The hope here is that gold will stay stable even if other investment options do not. Now the thing is, we are currently witnessing what almost feels like a perfect storm of global uncertainty. There are multiple ongoing conflicts around the world, and just until a few days ago, there was also big uncertainty around the US elections. So because of all of these things, central banks across the world, including our India's RBI, have been buying up gold at a historic pace. The RBI, for instance, has added a massive 78 tons to its reserves this year. To put that into some perspective for you, this is the second highest level of gold buying in the entire history for the RBI. And when central banks buy gold in such large amounts, it usually sends signals to the broader market that gold is a very valuable asset, especially during turbulent times like what we are facing currently. Now the thing is, typically when the price of gold climbs up, people shy away from buying it because of course it's more expensive. But in India, very surprisingly, the demand for gold has stayed very strong. This Diwali season saw great sales for gold. People continue to invest in the shiny metal through things like jewelry, coin and gold bars despite all these high prices. But what is even more important and interesting here is that jewelers have also now started to take note of this trend. Titan Company, which owns the brand Tanishq, has seen increased demand since the month of July, particularly for wedding-related jewelry. Now, this uptick also aligns with the government's recent decision to cut import duties on gold, which makes it cheaper to bring gold into the country. Now, this price adjustment drew buyers back into the market, especially those people who were looking to purchase big-ticket items like wedding jewelry. PNG Jewelers, which is another major brand, reported a very interesting trend during Diwali. Their sales grew by around 7 to 8% in terms of volume, which is the actual quantity of gold sold. But the thing is, in terms of value, their sales jumped to a massive 35 to 40% as compared to last year. So this difference says that people are not just buying jewelry a little more than they were before, they are also investing in pure gold like coins, bars, etc., which hold more straightforward investment value. Now, of course, this shift towards pure gold investment may somewhat be influenced by the government discontinuing the gold sovereign bond scheme, which was a popular way for people to invest in gold without physically buying it of sorts. Now, with this scheme no longer available, people have fewer non-physical options available for gold investment, which is probably likely pushing them towards buying gold directly. Talking about the supply side, India's gold imports have surged pretty well thanks to the import duty cut in the month of July. In the month of October alone, official gold imports were valued at about 59,000 crore rupees, which is a huge jump from about 36,000 crore rupees in the month of September. Monthly imports are now at around 95 tons, which is nearly double of what we had seen earlier this year. This shift has also helped clean up the market a little bit by reducing black market activity, pushing most of the trade into official and transparent channels, which benefits both consumers and jewelers. Now, another noteworthy trend here is the rise in gold ETFs or exchange traded funds. See, a gold ETF allows people to invest in gold without actually holding it physically. These funds track the price of gold and offer a simple way for people to benefit from price changes without the hassle of storage or security concerns. Now, in the month of October, gold ETFs in India saw record inflows of about 1,960 crore rupees. And this pushed total assets in these funds to a new high of 44,500 crore rupees. This year alone, Indian gold ETFs added 12.2 tons, which is a 32% increase from last year. So this trend highlights a shift in how people are looking at gold today, not just as a jewelry item, but also as a valuable investment opportunity, which can be accessed very easily through ETFs today. Another thing that is interesting here is that fewer people now are trading old jewelry for new pieces. To give you an example, Tanishq has reported a decrease in the number of customers who are exchanging their gold jewelry for new items. This drop, which is about 3% lower than usual, says that with prices so high, people might prefer to hold on to their gold rather than to trade it for something else today. Also, in the past, jewelers used to offer discounts on making charges in order to attract customers. But this year, some major brands, including the likes of Tanishq, has shifted their approach quite a bit. They are now offering discounts on the gold price itself. And this move shows how competitive the market has become, with so many larger jewelry brands trying to match aggressive pricing strategies of smaller local jewelers. So as a summary, looking forward, jewelers seem to be fairly optimistic about the wedding season, which typically runs from the month of November to March in India. There are several auspicious days on the calendar, and the expectation is that there will be a strong demand for wedding related jewelry. Now let's move on to the third and final story of the day and talk about India's footwear industry. Now the thing is, footwear is a market that is usually under the radar, but it is currently experiencing some big changes right now. And in this particular story, that is exactly what I'll be discussing. What is exactly happening with footwear and why it also matters to people like you and me. Look, India's footwear market is currently valued at around 1 lakh crore rupees. And a very big reason why this is growing so much is because footwear is no longer just about having one pair of shoes that you wear just about everywhere. People today are buying multiple pairs of shoes, each for specific purposes like workouts, office wear, casual wears for weekends, and so on and so forth. So basically, the idea of more pairs per person is what is broadly helping this market expand so fast today. But mind you, it is not just the number of shoes that is changing today. People are also getting very particular about where these shoes exactly come from. The days where a lot of us were okay buying cheap and not branded shoes from local stores are slowly fading away going forward. Instead of that, more and more people are today choosing branded and high quality shoes. I'll also prove this to you with numbers. About 10 years ago, big and popular brands made up only 23% of the footwear market. But in today's time, they hold a huge 36%. And the thing is, this shift towards well-known brands is very significant because it reflects a bigger trend in the industry. People want quality, durability, and shoes that look and feel good to them. But with all of this, the big question is, why is this even happening? Why are people flocking towards better brands for their shoes today? See, there are three major factors which I'll explain today. The first one I'll talk about is the rise of a category called athleisure. Look, today athleisure is one of the biggest trends in the apparel market. To give you some context of exactly what it means, it is a style that combines athletic and leisure wear. In the footwear space specifically, you can think of athleisure as those sneakers which work at a workout and also equally well for something like a casual outing. Also, I'm sure you've noticed how sneakers are pretty much everywhere today. People wear it to gyms, to cafes, and some people like me even wear it to office nowadays. And by the way, this trend is a global phenomenon. It is not just restricted to India. And that is why the athleisure market is not slowing down by any means. Analysts are expecting it to grow by about 15% every single year, eventually making up about 20% of our footwear market. So going forward, if you also physically notice the trend of more and more people wearing sneakers going forward, you probably know why. The The second trend I'll talk about is premiumization. Now, this is just a very fancy way of saying that shoes are slowly becoming more than just functional items, and they are now turning into statements of style for people. People are increasingly willing to spend more on high quality stylish shoes which reflect their personality. Take Bata for example. I'm sure all of us at some point in our lives have owned a pair of shoes from Bata. They have been known for a really long time for affordable everyday wear shoes. But in the last few years, they have also started putting more effort into their premium lines, especially with brands like Hush Puppies. By focusing on quality and style, Bata is now trying to appeal to customers who want something a little more than just basic shoes. They have even introduced a sneaker studio line and partnered with international brands to keep up with the demand for fashionable options. Metro Brands, which is a competitor of Bata so to speak, has taken a very similar approach. About 85% of their sales today comes from shoes that are priced above 1500 rupees. Now, I know this price range may not quite seem premium as such, but in a country like India, this is considered mid to premium as a segment. And a move towards premium products here has helped Metro increase its profits because now they can charge a little more for high quality shoes as well. But at this point, I'm sure you're wondering, why exactly are people willing to pay that extra amount of money? See, rising incomes are playing a huge role here. Just because people have a little more disposable income today than they did ever before, they are choosing to invest in shoes that are stylish and also long lasting like I mentioned. Of course, this premium segment is profitable for brands as well, so it is a win-win in all scenarios. Moving on, the third big trend that is shaping India's footwear industry today is distribution. See, India is a huge country with a diverse population, and reaching all of these customers is not at all easy as you might imagine. So in order to tackle this, brands are now combining both online and offline sales strategies to make sure that their products are available pretty much everywhere. Relaxo Footwear, for instance, is not focused on premium products. Instead, they have built a massive network of 70,000 retail touchpoints from big cities to small towns as well. Now, this wide reach gives Relaxo a very unique advantage in terms of accessibility to India. On the other hand, brands like Campus and Bata are focusing very heavily on e-commerce. A large chunk of their sales now comes from online platforms, which works especially well for brands that target younger and tech-savvy shoppers. Campus, for example, does not quite require a physical store in every city. They can today reach customers across the country through their online channels itself. But offline stores are still very essential, like we saw in the earlier Mamaearth story as well, and this is especially truer in smaller cities where people prefer shopping in person. Bata, for example, is expanding its network of franchise stores to reach these areas. By the year 2025, it is estimated that online footwear sales could grow from 16% to 22% of the market, and this highlights that both online and offline presence is very important to stay competitive. So all in all, if you've noticed more and more people wearing branded sneakers or stylish footwear today, these trends probably explain exactly why. India's footwear industry is growing fairly fast, and the strategies that these brands are using today will probably shape the market for the many years to come. So whether you're an industry analyst or just interested in business trends in general, this is definitely a sector you might want to keep an eye on. With that, let's move on to the final section of the day and talk about the quick news tidbits. First, India plans to cut laptop and IT hardware imports by about 5% under the Make in India and PLI schemes. This encourages domestic manufacturing and reduces reliance on China. Second, CNG adoption in sedans has surged to 41.5% of sales in 2024, up from about 10.8% in 2021. This is driven by cost-conscious consumers largely. While sedans' overall market share fell to 8.3%, SUVs have soared to 53.56%. This has prompted manufacturers to reposition sedans for niche markets. Third, India's smartphone exports have hit $2 billion in October 2024, which is a 70% year-on-year jump and largely driven by Apple and Samsung. If these trends continue, FY 2025 exports could reach 18 to 20 billion dollars, which could solidify India's role as a global manufacturing hub. Fourth and the final one for the day, Tata Electronics acquired a 60% stake in Pentagon's Tamil Nadu iPhone plant. This boosted its role in Apple's supply chain. India's iPhone production is set to account for 20 to 25% of global shipments in 2024, which is up from 12 to 14% in the year 2023. That's all the news and stories I have for you today. I hope you found value in this episode and learned something new today. If you like this episode, please leave a comment down below to let us know what you specifically enjoyed. And in case you did not like the episode, please still let us know in the comments on how we can improve this better. As usual, this is your host Anurag Bansal signing off. I'll see you in tomorrow's episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.